Bismillah ar-Rahman ar-Rahim. Assalamu alaikum students. In the last class, we have discussed the depreciation. We have made three accounts related to the uh, non-current asset, that is the fixed asset. Number one is fixed asset cost account, fixed asset cost account. Second, fixed asset accumulated depreciation account. The another name of accumulated depreciation account is contra asset account. And the third account is the depreciation expense account, also called provision for depreciation uh, expense account. Okay. So in the last lecture, in the last class, we have discussed and we make these three accounts. So at the end, we have made some extracts related to the statement of comprehensive income and the statement of financial position. So you have to remember that in state of financial position, we will write only the carrying amount. So the asset will record on carrying amount, on WDV amount, on net book value amount. So how can we calculate the carrying amount? The carrying amount is cost minus accumulated depreciation. And in the statement of comprehensive, we will record depreciation expense for the year only. Okay. We have done at this point in the last lecture this one. So extracts related to profit and loss account for the year 2021. So there is the provision for depreciation expense, that is the 12,800. Here we write it. And 22, the depreciation expense will be the 10,240. Here is 10,240. And same in the 2023, 8192. Here is the 8192. And extract for the statement of financial position. So in 2021, the carrying amount of the machine is 51,200. Here we write it 51,200. Okay. Okay. So we have discussed two methods to calculate depreciation of an asset. The one is the straight line method, and the second one is the reducing balance method. So here is the question: when will we use straight line method, and when will we use the reducing balance method? So in your exam, the examiner will nominate or given which method you has to use, either a straight line method or a reducing balance method. Uh, it will given in the question. So you don't worry about which method do we use. Got it? But here is some reason of using straight line method or reducing balance method. For example, when we will use straight line or reducing, it depend upon the usage of an asset. For example, if we use a special nature of an asset and we will use that particular asset at the early stage, it's mean most of the asset will be used in the early stage, mean that depreciation at early time will be more than the later depreciation. So the usage of asset on early time is more than the later. So it's better to use reducing balance method. So in reducing balance method, you can see this when I compare the depreciation straight line method with reducing, you can see this in straight line method, the depreciation amount remains same for every year, 800, year 2 800, year 3 800. But in the reducing balance method, the depreciation of first year will be the higher than the second year, and the second year depreciation will be the higher than the first year, and so on. We can say this, the depreciation of first year is higher than 900, is lower than the first year, and third year is the lower than the second year. So if we use asset mostly on early time, so it's preferred to use the reducing balance method. And if the usage of asset is evenly throughout the year, throughout the lifespan of an asset, so then it will be better to use the straight line because the usage evenly. So for equivalence of depreciation, we will use the straight line method. So it's here is the reason why we select straight line or a reducing balance method. Okay. Now, another concept, uh, we have discussed this, the net book value. What is the net book value? What is the net book value? The net book value is also called the written down value and also called the carrying amount. And what does it mean? How to calculate carrying amount? The carrying amount is cost minus accumulated depreciation. So now we discuss the journal entries related to the depreciation. Okay. So normally we have journal entries related to the depreciation. Journal entries. Journal entries. For instance, we have an asset. Asset cost is 100. Depreciation rate is 10%. If question is silent, you can use straight line method by default because it's easy to calculate depreciation using the straight line method. So by default, we can use straight line method. So you can remember this one. If question is silent about depreciation, we will use the straight line method. So this is the year one. So the depreciation of year one will be the 10% of 100, that is the 10. So this is the depreciation. So the carrying amount will be the 90. At year 2, depreciation again 10%. So the so we are using the straight line method. By default, we are using a straight line method. So in straight line method, we always use a cost for the depreciation. So the 100 of 10% is 10. So again, 10% of 100 is 10% of 100 is again 10. So here is again 10. So if we subtract 10 from the 90, the carrying amount will be the 80. So we write the journal entry for these 2 years. For these 2 years, for example, we purchase asset on 1st Jan, for example, 2001. Okay. So write journal entry of all 3 years. So here is the journal entry. At 1st Jan 2021, when we purchase the asset, assume that we purchase the asset by using the cash. So the entry will be the asset debit. Asset may be a machine, maybe a building, maybe a plant, maybe a land. Asset can be anyone. So the asset will be the debit by 100 and cash या bank or bank credit by 100. So this is the entry of 1st Jan 2021. Okay. So at the first year, the DAP will calculate depreciation or the end of the 2021. So this is the 2000, you can say 21. So in 2021, we record the depreciation. So the entry of depreciation will be the depreciation expense debit, accumulated depreciation credit, accumulated depreciation credit by 100. If we not maintaining the cumulative depreciation account, we can write asset account here because depreciation expense mean decreasing the value of asset. So we can write asset account here also. But normally we use the depreciation accumulated depreciation account rather than the asset original account. Okay. So this is the entry of the 31st December 21, and the again entry of the 2022 is the year 2. So we will record the again depreciation expense, that is the 31st 2022. Again we will record the depreciation expense debit by, oh sorry, is the depreciation expense is 10, not 100, not 100. Here is the 10. Depreciation expense 10 debit, and accumulated depreciation. Accumulated depreciation, that is the 10. So this is the journal entry of asset account. So in this journal entry, we will record journal entry of two items. Number one, purchasing of an asset, entries related to entries related to purchase of an asset, and the second entry relate to depreciation of an asset. Depreciation of an asset. So the third entry will be based on disposal. Disposal means when we sold our asset, sell our asset. Okay, that will be discussed later. Okay, so here we discuss the two journal entries. First one is related to purchase of an asset, and second one related to the depreciation of an asset. Okay, so here is the question. For example, journal entry for the year ended. Journal entries for the year ended 31st December 2021. So here is the 21. You can extract data from the original calculation. That is this one. This one. Uh, T purchased delivery van for $18,000 on 1st Jan 2021. So this is the first entry related to purchase of an asset, and the second entry will be the depreciation of an asset. Okay. So you can also extract data from here. So the first entry will be the purchase of an asset. So delivery when debit, if we purchase on credit, so here will be the mention name of your creditor. Creditor, or you can say this account payable. Account payable. The word account payable we can use where when we purchase other than inventory item. The word payable is used for the inventory purchase. The account payable is used for normally the non-current assets. So this is the entry of double entry when asset debit or creditor credit, or if we purchase asset through cash like this, purchase asset cost is 100 and assume on cash. So the entry will be the asset debit and cash or bank credit. And the another entry of the 2021 will be the depreciation of the asset. So the depreciation entry will be depreciation expense debit or accumulated depreciation credit, or depreciation expense debit and accumulated depreciation credit. And if we want to transfer this one to the profit and loss account, so the entry will be the statement of profit and loss account debit and provision for depreciation or depreciation expense credit. So we know that this depreciation amount, when we transfer this entry into the statement of comprehensive income or profit and loss account. When we transfer this entry into the statement of comprehensive income or profit and loss account, that entry will be, so depreciation expense debit, so depreciation expense increase, so actually depreciation expense increases profit and loss account. Depreciation expense increases because expense increase the cost, expense increase the cost, okay, and decrease the profit, and decrease the profit. So depreciation expense actually is the expense, and profit and loss account, the nature of profit and loss account is the credit nature. So normally profit and loss account relate with income. Why income? Due to the word of net profit, because in statement of comprehensive income, so income shows net profit, net profit. So the statement of comprehensive income of profit and loss account nature is credit nature. So the nature of expense is debit. So depreciation expense increases expense, increases expense, or you can say this increases cost, but decreases profit, but decreases profit, or you can say income. So this is the effect, depreciation effect, or you can say depreciation impact on profit and loss account. So the depreciation expense decreases the profit. So if profit decrease, there will be the debit entry. There will be the debit entry. So the entry will be profit and loss debit by 10, and depreciation expense credit by 10. So this is the entry we will pass in statement of comprehensive income. So profit and loss will decrease by 10 and depreciation expense increase by 10. Okay. So this is the entry. So these either we can pass this entry or we can pass this entry, that both entry will be considered correctly. Okay. So this is the first entry which will record on the statement of financial position by uh, adjusting the depreciation, uh, or this entry will be passed to statement of comprehensive income. So if we pass entry in the statement of comprehensive income, this entry will be the passed. So you can see the entry number 3. Or if we record asset on statement of financial position, so these two entry will help out, because we will record asset on carrying amount. So how to calculate carrying amount? This is the cost and this is the depreciation. So 100 minus 10, 90 will goes to the statement of financial position. Okay. So this is the actually the journal entries. Okay. Any question? Any question? Any confusion? Okay. Now move further. So yes. Okay, yes, definitely. I will practice past paper to you once I have done this chapter. Okay, once I have completed all the concepts related to the depreciation, then obviously we will go to the past paper for further past paper exam practice. Okay, so don't worry about the past paper practice. I'm not sharing the past paper in the mid of the journey. So once you have completed or retain all the concept, then you will be, because in the past paper the single concept is not asking examiner to you. The examiner is asking the multiple concept in a one question. So at this time it will be difficult to solve past paper question completely. If you are willing, then I will give you a part of the past paper related to this topic. Or the second way is, Yes, the second is you have to wait for a one or two class more. Then definitely, okay. So don't worry about the past paper. Definitely we will solve past papers. Okay. After completing the chapter, I will share some past paper to you. Okay, for your definite exam practice. So here is we discuss the journal entries. So you have obviously maybe you have done this question because this depreciation question was your homework. Okay. So this is again journal entry. Now you can easily write journal entries. Okay. So we have done the example number 5 as well, and we make an extract. So here is the some question. The most appropriate method for calculating depreciation, I gave you the answer. If the usage of asset at earliest stage is greater, so we will use the which method? So if usage of asset on early time is greater, then which method is suitable? Straight line or reducing? What I told you? Can you tell me? The reducing balance method will be the best. So you can write, for example, more depreciation in the early year of its life. In this case, reducing balance method would be the most appropriate. Okay, or yes, the business will use them fairly constant rate or rate that is not significantly different from year to year. In this case, a straight line method may be the most appropriate. So it's depend upon the company nature. Okay, with method a company want to opt. Okay, the reason is if depreciation is constant, we will use straight line. If depreciation is early at the early time, then reducing balance method is best. The next concept is how to measure the value of non-current asset by the cost model or revaluation model. So we have a accounting standard. So we have accounting standard which we will discuss in the uh, AS level and in professional accounting level, that is called IS 16. So IS 16 is International Accounting Standard 16. This standard is based on the property, plant and equipment. The name of this standard is property, plant and equipment. This standard said we have two methods to record asset. The first method is the first method is cost model, and the second one is revaluation method. Revaluation method. So what is the cost model method? The cost in cost model method, we will use the historical cost. We will use the historical cost. And it's mean we will record asset on cost. Historical cost mean initially we will record asset on cost. It's mean we will record asset on cost then minus accumulated depreciation. So this is actually the cost model we have discussed in the early example. And the second method is revaluation method. So the revaluation method said maybe the amount which you purchase the asset is not going down frequently. Maybe the market value of that asset will increase in the later or upcoming year. so that your asset need to be revalue. Your assets need to be revalue. So you have to revalue your asset. For example, this is not in our scope. The calculation of revaluation method for our uh, O level topic is not required. I just give you a little example, but not uh, to learn the overall calculation. So just to understand how revaluation method work. For example, we purchase asset on 1st Jan 2021. So the cost of asset is, for instance, that is the $1,000. So at the end of year 31st December 21, we record depreciation, that is the 100. So what is the carrying amount? What is the WDV? WDV. What is the carrying amount at the end of the first year? That is the 900. 900. For example, for example, at 1st Jan 2022, at 2022, market market value of an asset increase by, for example, 400. Increase by 400. So the new amount will be the 1400. So the new amount will be the 1400. So we will now record depreciation from 1400, not from 900, because at the end of the year we revalue our asset. We revalue our asset. So this is actually the concept of revaluation. At the end of the some years, the market value sometime increase. So then we have to reverse our calculation. How it work? It will be discussed on the uh, later subjects. Okay, not here. So you have to remember that according to IS 16, we have two method. That is cost method model that we have discussed, which generally testing in our scope. And the second one is revaluation method. Sometimes the value of asset changes with the passage of time, so we have to consider that change in our books of account. So that will be the revaluation method. Okay, sometimes the asset revalue, sometimes asset devalue. Okay, so we will adjust the change in the accounting values. The revaluation method of firstly I have to read this one. Cost model I have discussed this. Now discuss this one, revaluation method. The revaluation method is generally used where the asset is made up of small items. An example could be the small tools that are used on regular basis in a large auto repair a business or in engineering work. It would be inappropriate to use either of two methods of providing for depreciation previously described on hammer. For example, a hammer cost is $4.5 or on a pair of wire cutter costing 4.75. So they are collectively known as loose tool. So if we are going to calculate the depreciation of loose tool, so it's better to follow revaluation method. So how to calculate depreciation related to the loose tool? So loose tool mean if we purchase asset having a small amount, we purchase asset having a small amount. So how can we depreciate? How can we depreciate that asset? So applying, instead of applying applying any depreciation rate, uh, we just calculate, not to calculate, or you can say this, we just compare, we just we just uh, compare, we just compare cost with revaluation, cost with revaluation. So here is the depreciation automatically comes to us. Okay. So in revaluation method, as per our course at this stage, it is too simple, so simple. So the case I am describing is the advanced one. Okay. So that's why I left here. So in revaluation method, how to calculate depreciation? I give you an example. So you have to, maybe you have to cross this one. We don't need this. Okay. I'm not removing this, but to just cross it, uh, because it's not related to our course. So this example is related. For example, uh, cost of loose tool, cost of loose tool, uh, for you can say saw, hammer, etc. Anyone you can say this, or you can say this the printer here also, the cost of printer. Cost of loose tool, for example, is $100, $100 at first Jan 21. So at, for example, first June 21, purchase another one. You can see the screwdriver, screw, amounting, for example, you can say this 50. So at October 21, we purchased uh, we purchase mm, saw, that is the, you can say this the 40. So at 31st December 21, this is the closing date of the year. So at the closing date, what is the total value of loose tool? Total value of loose tool. Loose tool, that is the 190, 190 dollars. So after the end of the year, after the end of the year, after the end of the year, value of loose tool will be at 31, at 31st December 21. Total value of loose tool is 190, and at 31st December 21, uh, value of loose tool, you can say the market value, uh, market value of loose tool, for example, 160, 160. So here we can easily calculate our depreciation. Depreciation for the year. It's related to the whole year depreciation. So the depreciation will be the, in our books of account, the cost of asset is 190, but the market value is above than 190 or is below than 190. So the market value is decrease. Market value decreasing mean our assets depreciates. So we will calculate depreciation at 30. Okay. So this is the method of revaluation. We compare just cost with the market value or the value at the end of the financial year. So if our cost is less than, if our cost is the more than the market value, so it means the value of our asset decrease from 190 to 160. Okay, so this is the method. So you can have you done this? Got it? This concept? Okay. So example number 6 is your homework. You can solve this example by following this example. Okay. So the concept of evaluation is limited to this one as per our course. Okay. So how to prepare ledger account and journal entries? Let's calculate. Let's see. We have done this. So now the new concept will be the disposal of non-current asset. Disposal mean uh, when we want to sell our asset. So this concept relate to uh, how to calculate profit and loss on disposal. Profit and loss on disposal. What does disposal mean? Disposal means sale of an asset. Sale of an asset. Okay. So you have to just revise this concept. Then I will start the disposal concept. Okay. Okay. So the concept related to the sale of an asset, disposal of an asset, will be the discuss inshallah in the next class. So for this class, you have to solve some exam style question for your practice. Okay. This question relate to because this disposal concept takes time. So this is the last concept of our question. So this is your homework for today. Self-test question. Self-test question you have to solve from question number 1 to question number 14. Okay. It's enough or you can do more. Tell me. It's enough or you can do more because it's not too much homework. Kindly tell me. Okay. Can you solve more? Okay. So this is the remaining two question. You can solve this one. Question number 15. You have to calculate the yearly depreciation. Oh, just a minute. So in question 15, you have to calculate yearly depreciation on this van. Yearly depreciation. Okay. And the question number 16 will relate to our last concept. This is the calculate profit on loss on disposal. So disposal concept will be discussed on the next class. So you have to solve from question number 1 to question number 15. Then after the disposal concept, I will give you to some past paper questions for further practice, and someone definitely I will solve for you. Okay. Okay, student. It's enough for today. You have to practice this question and self test questions too. Okay. Thank you so much. Take care yourself. Allah Hafiz.